The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning, 9:06 a.m. We got about 24 minutes to go until the start of trading, and you got markets picking things up in the positive right now. You have the S&P futures up by 12 points. We got some action in gold, of course, with tariffs looming. Not really sure the market what's going on there, but nonetheless, gold with some volatility. And we have the S&Ps up by about 0.2%, 6378. NASDAQ 100, we're up by 34 points, or 0.1%. 23,528. The Dow slightly in the green by 64 points. Quite a sell-off for the Dow yesterday. Dow right now up by 0.1%, 44,144, and the Russell up by 10. Bitcoin down about $1,100, 117,000. Not Ethereum though. Ethereum, how about $39.99? The price last night. We're $39.19. Ethereum in the positive by $26. Having a moment, that's for sure. We'll jump to gold in a moment. First, we jump to yields. A little bit of lower price and higher yields. As we got the 10-year with about 4.25%. Let's pull it up to see exactly what we're at right now. Ooh, we're up to 4.27. Okay, 4.27 is the number we're at on the 10-year right now. And you jump to the dollar. 98.27. We're chopping around right near 98. Early yesterday morning, we had a 97 handle, but we have a little bit of dollar weakness, and let's talk some gold, baby. So gold up $30. This was 6 o'clock last night. You have the news hitting. It pushed in the den. It was everywhere, folks, if you were in this market, and the market really isn't sure if this is even a mistake, which is remarkable to say with that type of a deal going on, but that is the case. Not really sure of the details. Okay. But you're talking about gold hit by surprise tariffs, new turmoil. U.S. Customs and Border Protection clarified that 1 kilogram and 100 ounce gold bars are subject to reciprocal tariffs that are being enacted. That, of course, disrupts shipments. And gold futures surged. They're looking for details on this. The reason why I pause, right? Traders, analysts understand the full scope, whether the CBP would target larger than 400-ounce gold bars that underpin the trading in London, right? You have a dislocation of those markets going on. The potential market consequences are so profound that some question whether the change could be a mistake on their part and suggested it may be subject to legal challenges. I mean, did they make a mistake? This is so crazy. That's literally what's going on in the market right now. In the long run, okay, the existence of these tariffs on deliverables raises the question on the role of futures trading. Yeah, we expect the gold market and precious metals market more generally to remain very nervous. And yeah, you got a spike going on. Managers at 2 major gold refineries in Asia, can't blame them, said they're pausing shipments to the U.S. until, and I can finish that sentence for them, they find out what the heck is going on, right? Until there's more clarity on the tariffs. Can you imagine actually being a refiner that's shipping gold to the U.S. right now? They're saying these tariffs might already be in place. They don't even know. Yeah. These 1 kilogram gold bars are the most common form traded on COMEX, the world's largest gold futures market. They comprise a bulk of Switzerland bullion exports to the U.S. That's become a flashpoint as trade negotiations between the U.S. and Switzerland. So probably a pawn in that aspect of things going on. So the CBP letter said that gold bars fall under one code, which is tariffed rather than the non-tariff, as expected. That classifies them as semi-manufactured, rather than unwrought type of gold. It's unclear whether other types of gold bars will be subject to it. Yeah, so we got some volatility, man. And boy, talk about a little headline risk, folks. You got some headline risk going on in gold. Gold spikes to 35, 34.10. And, my take on this is that's not how you want to break the highs, right? With like some fake news that might not even be real, that's a pawn in a trade negotiation, and that's the way you break the highs, but it's not real, and then you possibly give it back. That would be quite a last exhaustion high. That tariffs are put in place that weren't expected. Gold hits 35, 34. I mean, you want a deviant form of making a high on weakness, on irrational behavior. That's a way to do it. Now, you're going to get some volume today, though, and that's going to be the tough part. But do we get volume with a give up? There's a potential for this bar, folks, okay, that we're dealing with right now on gold to turn into a radically red bar that engulfs a portion of what we accelerated higher if this news ends up being clarified. That doesn't exist. So keep that in mind on gold as it's looming, and we may even get some action on that today. Friday's in the gold market, okay? If you've been around Tigresses long enough, Friday's in the gold market, you got some potential for some real runs in that market. Silver right now, up by 25 pennies, trading at 38.54. Some of the silver stocks yesterday, right? How about Hecla? On their numbers, you accelerate, up by almost 20%. First Majestic, one of the other silver equities, catching a little bit of a bid. Yeah, amazing. Some of these silver equities. And then you talk about Bitcoin and Ethereum. So Bitcoin right now, I've talked about, I think you're in the run of an A to B, C to D, brings it to about 130,000, chopping around these highs of about 120,000 right now. But Ethereum, you're bumping up against the highs of last year. So be careful in Ethereum. Everything I see is that Bitcoin's going to like 19,000. Not everything, but there's some fantastical things out there. Ethereum had a Bitcoin moment, all this stuff. Now, Ethereum was at 5,000 in November of 2021. You're 1,000 below that. But what I always struggle with in the long-term analysis of this, right? One of the risks in crypto, okay, imagine this. One of the risks in crypto is that what do you really need the store of value to be at one Ethereum being 4,000 versus being 3,000? You can always secure Ethereum no matter what price it's at. Same thing with Bitcoin. You can always just buy a fraction of a Bitcoin, right? And fraction it down, fraction it down, fraction it down. All right, we jump around to some of the leaders out there. Amazon shares slightly in the green this morning. Quite a couple days for Amazon to the upside. This morning, we're slightly higher with the market. Apple. Talk about it. Apple shares up by almost $1 today. Yeah, quite a run. From yesterday's action on Wednesday on the deal, and then the Oval Office press conference Wednesday evening. They actually finished the session at almost highs yesterday, pushing 220. Google shares this morning, slightly in the green. All right, folks, stay tuned. We'll come back. We'll talk some other equities that are moving. We're going to take a look at Under Armour, Expedia, among some others. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps up by 14 points, but Under Armour, you're going to open down 20+% right now. And you take a look at this equity, we're going to open near $5. You are pushing the April lows. You're going to do it with volume. And this stock, folks, there's your weekly. We've been making this base for a while. You've been down near this $5-6 area. We make a low in September of 2022 of $5.74. Remember, we're going to open $5 right now. You back it up further than that, and that's as far as you go. Is that as far as you go? That's as far as you go. Look at that, man. If that's not a chart. Sometimes, folks, you look at charts like this, right? Never think it's too late to get out of an equity. From $46, you get a low of 10, you're back to 25, you're back there a couple years later, and now we're in the doldrums, man. And you're at $5, and these numbers are rough. So, headline numbers, okay? They have earnings, adjusted earnings per share of 2 pennies. The market was looking for 3 pennies. Revenue of $1.1 billion came in below 1.13. So they barely miss on revenue and they barely miss on earnings, right? You jump over to the Analyze tab. We're talking about Under Armour. They got a problem. Yeah, the chart says it, right? I don't have to say it. The chart says it. Under Armour has a problem. Now you pull up the market cap, okay? The market cap is $2 billion. Well, they're making no money, right? They're making 2 pennies a share right now, okay? They have revenue of about $1.1 billion in 90 days, so they're going to be pushing about $4.4 billion over the year. Maybe they get more during the holidays or something like that, right? 2 pennies a share. $2 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 pennies Folks, never in my right mind would I pay $2.2 billion to purchase a company that is only selling $4.4 billion in sales and making no money. Now, Under Armour's quite a brand, okay, and maybe you get a turnaround deal. But let's go one step further on the data, okay? They're shrinking everywhere. So check this out. Revenue falls 4%. That $1.13 billion number that I just gave you. All right, and I'll pull up. This is just the news in Thinkorswim, okay? Revenue falls 4% to $1.13 billion. Revenue in North America down 5%. International revenue down 1%. Wholesale revenue down 5%. Direct-to-consumer revenue down 3%. Every part of their business is going down. Going forward, Under Armour is focused on improving its brand positioning with premium products and higher average selling prices. For the current quarter, they look for revenue to fall 6 to 7% compared with the prior year end, and adjusted earnings of 1 to 2 pennies. However they're going to do it, they're going to make sure the books show that they make a penny, not lose a penny if they can. And I'm not kidding. That's how it goes. Analysts are looking for a revenue decline of almost 3%, adjusted per share earnings of 26 cents. So, you look at those numbers, you look at a company that's taking in $4 billion a year. It's worth $2.2 billion. They're shrinking everywhere. And then we get to price and volume, folks, okay? The only part of this chart that has buying is June of 2020. The market was on fire. That's it. Look at this chart. Look where the red sticks out on the bottom when you're talking about volume on a monthly. Okay, you have massive selling in May of 2022 when you traded from $15 down to $7.42 in a couple months, on its way down to $5.82. You got a reprieve in the beginning of 2023 up to almost $12. But look at the volume since, folks. Look at that volume in April. Okay, now that's a monthly. You take a look at the weekly. Of course, you have the April volume down there. You have this May 12th acceleration on their last earnings, but that's going to get wiped out, folks. Wiped out. Now, right now, yeah, this is going to be an interesting day when you're down 20%, you're pushing the lows, and Under Armour shrinking all over the place, man. All right, and another tough go around, Pinterest. So let's check on the chart of Pinterest. So off of the lows of 31 last night, but boy, you're pushing the lows since then almost. Pinterest right now down about $5. And this is not quite the case with, Under Armour. This is, they're growing at least, right? Sales are growing 17%. Net income almost $40 million, up from $9 million. Okay. Third quarter sales above where the market was looking for. But guess what? Third quarter sales not beating enough of what the market wanted. There's still some lingering concern from advertisers related to tariffs. Asia-based e-commerce retailers are pulling back spending in the U.S. And so, yeah, that seems to have spooked investors a little bit. Almost 600 million global monthly active users in 90 days. That surprises me. But hey. Take a look at this thing on a daily. Yeah, you had all the selling right after the close that goes into the daily there. That's your spike. You do 25.2 million shares yesterday. Yeah, I mean, technically, we're going to open at 34.17 right now. You have this sign of strength from June 27th, but we're going to be below that bar. And you have the potential to take it all out with volume. We're going to open near $34. You're coming into this 32.50 area for Pinterest. We take a little bit of a longer term look on a 5-year weekly. Man, look at these, how it's just like, you run into this area, right, of technical resistance. It's just an area of visual support or resistance, folks. 40's it. Maybe you can make the case 45, right? But you start approaching 40 from 25, you better believe you might face a little resistance. And we're doing it today with Pinterest. Going to open in the negative. Some of the other equities, we got some real trade desks, man. Yeah, look at this thing. Oh, look at this thing. You're going to open down $30. Oh. We'll be right back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets open. S&P's up by 19 right now. NASDAQ 100 up by 62. And yeah, back to Trade Desk when I was coming in, okay? They put up some decent numbers, but it was their CEO out there that actually cites tariff uncertainty on large advertisers that is tanking this equity right now. Okay, they put up decent numbers, but yeah, their chief executive, Jeff Green, noted in their conference call late Thursday its results are affected by ongoing tariff uncertainty on its key clients. Yeah. Unlike competitors who rely more on small and mid-sized, Trade Desk exposure to global brands, more sensitive to the macroeconomic shifts, Green said, but he added remains optimistic in volatile environments. These things have accelerated the move to programmatic because it comes with control, agility, and performance. Okay. Now, Trade Desk, they help advertisers plan, manage, optimize, and measure their digital ad campaigns. They provide demand-side platform that enables advertisers and agencies to buy digital media in real time. And they operate a leading independent platform for programmatic advertising. Folks, this equity's down 40%. 40%. Okay? This equity has 500 million shares outstanding, and you just lost $34. Whew. We're talking about 15 billion. Yeah. Man, 17, 18 billion. That's what it is. Wow. Yesterday you were a $44 billion company. Today you're a $26 billion company. If you don't think there's any uncertainty and red herrings that might be out here, folks, okay, you're telling me that a $50 billion company could go down 40% overnight because the CEO is telling the world? Look at this. It's not stopping. Down by 38%. Oh. Okay, we'll keep our eye on that one. Let's check on some of the other equities moving this morning. We talked about Pinterest, down by about 12% so far. You jump over to Under Armour. Yeah, down by 17% right now for Under Armour, man. All right, we jump over to casinos. Wynn with their numbers last night, down by 1.8%. And they missed on. They came in with $1.09 per share. The market was looking for $1.21. Revenue slightly below what they were looking for, $1.74 billion versus $1.75. Look at this. This is what we talk about. Visual areas of support or resistance. We're right at one right now. All right, let's see. The last time we came up here, you accelerated. Look at that run. September 2024. You make it to a high of 107.81. You don't have volume right at the high, but you sure had it on the run up to the high, which is always nice to see. You didn't have that same type of run up this time, though. And boy, you might really get an acceleration. That's the week of. We've already done 7 million shares. You put it on a daily, and you're going to get some volume today, man. Okay, and look at this. You got this volume high from July 1st. Probably coming back to at least test that high. 102.48 on Wynn. Some other equities with numbers. Yelp down 7.2%. Yeah, this thing's having some problems, man. You know, we got a downtrend channel on Yelp right now. Oh, that's not what I wanted. Oh, geez, I'm all over the place. There we go. Something like that. Let's go a little bit back further. Yeah. You got a real potential to drive a little bit lower right now on Yelp. That's probably where you line up right now. We take a look at the volume. This is on a weekly right now. Boy, you got a lot of selling on those tariff lows. And look at this, right? You catch that bounce, and then it's been all negative action for the last almost 3 months. Think about that. Think about when the market's done and what's happened to Yelp since their last earnings. Whew. And we are breaking below. Now, on a weekly basis, you've done 4 million because we're coming into these lows of last year. The low last year was 32.56. You are breaking below these lows right now. That is not good. Now, can you do it on volume? 6 million shares would have to do about 2 million today for Yelp. That'd be a tall order. 2 million shares. But pressure's to the downside on Yelp. Expedia on the flip side of that, strong numbers for them. They rip higher last night. They give back some of those gains this morning, though. travel booking website surged. Second quarter earnings and revenue topped expectations. And they raised their outlook. All right. Well. Oof. Again, right? You talk about an important technical area. Okay. Look at this. Finally made it back to the highs of 2022, which are the highs of earlier this year. You get just above it and you give it up. On a weekly basis, you're doing about, initially we did about 23 million shares at that high. You made it up there on 18.4 million shares earlier in the year. And look at this. We're going to get above it and test it with lighter volume. Okay, look at this, right? You get that huge acceleration 6 months ago in February on the earnings. The weekly's not going to have it, man. Okay, we got a big day. But on a weekly basis, you would need to do a tremendous amount of volume. 8 million shares today alone right now. That's not going to happen. So, boy, you get above it. We're looking at a high. Even the close, look at this. So this bar in February closed at 202.37. We're right under that bar. So you could get above it. You fail. You don't have the volume. And hey, this is just an issue of this equity being up 50% from April. Okay, they get some decent numbers, but expectations right now, everything. Some of the other equities moving this morning. You jump over to Block, XYZ. Strong numbers last night, but they give it up as well this morning. All right. Yeah, and they beat. Raised their guidance. They beat. The market gives it back a bit. All right, let's check out the leaders. Apple shares, slight give back. We'll call it flat right now. You jump over to NVIDIA shares. NVDA, up by 0.3%. AMD, up by 1.1%. Intel under pressure, up by 0.7% right now, 1991. Amazon, down by 0.1%, 222.83. Microsoft, up by 0.5%. And, I was thinking, so keep your eye on Meta, okay? Because if Trade Desk is down 40%, Meta should probably feel the impact of that to a certain degree. Now, yes, they service so many advertisers, and that's one of the things he was pointing to. But you better believe that they work with the big international ones as well. And Meta has no reaction when you got Trade Desk down 37%. How about that? Almost a full wipeout on margin. All right, folks, S&P's up by 18. NASDAQ 100 up by 76. We'll come back. We'll take a look at some of those gold and silver. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's pushing higher right now. You catch a bid on the open. We go back to a 5-minute chart, and you see that acceleration. We're pushing the highs where we were at about 8 a.m. this morning. S&P's up by 23. NASDAQ 100 above the highs of earlier this morning, accelerating higher. We got a high out here yesterday, about 60 points above where we're at yesterday. Today, excuse me. And you got all-time highs right now, about 240 points. Those all-time highs right at the end of July. And right now, we're pushing 23,610, but we are higher, man. Yeah, jumping around to some of the equities. Look at NVIDIA, up by another 0.8%. We jump over to Tesla shares, up by 2%. There you go. And not that this is contributing to what's going on in Tesla this morning, but interesting, the moving parts, right? Tesla disbands their Dojo team, and its leader will leave the company, upending their effort to build an in-house supercomputer for developing driverless vehicle technology. You have the gentleman who was leading that effort leaving, and Elon Musk has ordered the effort to be shut down. The team lost about 20 workers recently to newly formed Density AI, and the remaining workers are being reassigned to other data center and compute projects within Tesla. They're going to increase the reliance on external partners, including NVIDIA, AMD, and Samsung for chip manufacturing. It's a major shift for a program years in the making. Dojo, once positioned as central to Tesla's multi-billion-dollar effort to pull ahead in AI, and so, as Elon says, it doesn't make sense to scale two quite different AI chip designs. The AI 5 and AI 6 and subsequent chips will be excellent for interference and at least pretty good for training. All effort is focused on that. Yeah, talent's always in focus, man. Remarkable. The talent, but hey, the cost of capital. Talent is capital in the best way. Yeah, speaking of Apple, so Meta in focus. This story. You talk about data centers. Oof. PIMCO and Blue Owl, $29 billion data center deal is what Meta is going with. PIMCO is expected to lead a $26 billion debt portion of the financing. Blue Owl is providing $3 billion of equity. The financing is going to help the firm accelerate the development of AI, as they put it. Yeah, the race is on, man. $30 billion, just like that. A drop in the hat of what Zuckerberg is spending. And so, yeah, private investment firms, right? They're deploying capital secured by physical assets or for higher rated companies in a bid to differentiate their business, as they say. Many see the multi-trillion-dollar market for private asset-based finance and data centers in particular a massive opportunity to expand their revenue stream. Data centers, check it out, almost $7 trillion to meet demand for computing power globally by 2030. $7 trillion of capital is about to get deployed. Folks, by 2030, it's about to be 2026. Okay, you're talking about 4 years. And yeah, Meta, they're not going to stop spending. And that's the only thing that keeps me aggressively looking at these equities to see if there's some selling. Because, yeah, I talk about Meta, you talk about advertising, okay? But you want to talk about it, folks. Check this out, okay? Meta had a straight line run from October of 2022 to February of 2025. Okay, 2.5 year run. You go from 88 up to the highs of about 740. Now watch this. We're going to zoom in on this. I'm going to take that off. Such a nice pullback right to this kind of consolidation area you had last year from Meta. Many of these tech stocks had perfect pullbacks. I mean, you look at Apple. Okay, where was the pullback? On COVID? November 2021. It was everywhere. Microsoft. November of 2021. Okay. Now back to Meta. You make that acceleration. This is on a weekly. You get up there, but here's the kicker, right? You get a high here of 740.91. Zooming in on this high. Folks, last week on their earnings, you broke that B point and you did it on tremendous volume. Okay, you had 126 million shares. We were previously up there at the highs of 67 million. 82 is the week before that. And even if you take the earnings week before that, it was still only 119 million, right? You break those highs, you do it with volume, okay? And you're talking about a move in Meta that could take you to 1145 right now. It sounds amazing, but that's what the charts are lining up for. And you put it on a monthly. Okay, on a monthly basis, you broke the highs with volume because you didn't have the volume on those highs. There's not a lot of volume on those highs as you broke above that area. So, pretty remarkable you could be on that run. But I think that's what we're in right now. All right, we jump back to Google shares today. Look at this run. Up by 1.5% right now, up $3. All right, these markets are catching a bit. Amazon's only up by 0.2%. Google's up by 1.5%. Microsoft catches a bit by 0.5% right now. NVIDIA up a full percentage point. There you go. We jump over to streamers. Netflix up by 0.7%. Disney trades lower this week on their numbers. They're flat this morning. Warner Brothers Discovery, quite an acceleration yesterday on their numbers. You're at 11.78. You're down another 0.7% right now. Mickey D's down by about 0.2% right now. Let's jump to some retailers. Walmart. There you go. Look at this run on Walmart. Walmart's making a run to break the highs. So you got highs out here on Walmart on a weekly basis. You didn't have the highs there. The volume really started to come in when the selling in the market came in February. We're going to do about 80 to 85 million this week probably. Yeah, and that would be higher volume than you had at the highs. Now, you really got an acceleration off it, but look at this. Boy, you get above 105.30, and you do it on more volume than you had there. Put it back to a daily. Strong acceleration on Wednesday. All right, you want to see some strong volume to continue that run right now, because that was quite a day on Wednesday where you broke to a high of 103.69. Target, different story, down by 0.6%. Oof, Kohl's down by 3%. Nice. There's winners and losers, man. Coles takes it on the chin yet again, down another 3%. All right, folks, stay tuned. S&Ps, we're trading higher. We're nearing 6,400. S&P's up by 29, and we are. We'll come back. We'll take a look at gold and silver. Stay tuned, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. I have a chart of GE here. Quite a run. You're talking about being at 159 at the lows of April. We're at 274 right now. You're up another percentage point. That's a daily we're looking at. I got a couple of charts, a couple of notations on this. Okay, but boy, you back this thing up. Now, we got lows out there of 2022. That's a weekly. You put it on a monthly, right? Pretty interesting. You're coming back to in the year 2000. Do you remember the Conan O'Brien show when they used to say in the year 2000 and it was prior to the year 2000 and now it's the year 2025? I remember that. Does anybody else remember that? I remember that. We're back to the year 2000. So number one, that's going to be a little bit of a technical area, okay? You can't deny it. You can't tell me that there's not going to be something going on. Maybe you blow right through it, but put it on your map, $300 on GE, okay? Now the next thing is that we're coming into a 1-to-1 A to B, C to D, and that's just, this isn't cherry picking the low. If you just take the run that began in November 2023, okay, I'm going to put it back to a weekly on this. Yeah, that's kind of where you start a run, okay? And You accelerate to the highs earlier this year. The pullback is at an exact 382 of that run, and the 1-to-1 takes you to about 287. Now, when I'm looking at an equity like this, if I'm trading it very short term, we have this question in the Tiger's Den. Matthew, I'm not sure if you're in it long term, looking to get in it. Short term, yeah, you can expect we might have a little bit of a pullback. You see even a 382 pullback, okay? Longer term, in equities like this, don't overthink it. If you got this in a retirement account or something like that, yeah, you always want to be watching it, but you're going to have a pullback, and you just kind of set it and forget it and get ready. I mean, Meta's the same deal. You're going to have some rip-roaring pullbacks eventually, but on those equities longer term, this thing's on fire, man. You're doing it on volume. You're doing A to B, C to D's all over the place, and you got volume to the upside. All right, and gold, how about it, folks? All-time highs today on gold, 35.34. We're right now trading at 34.98.90. Gold up by $45. Tariff volatility looming. Silver up by 1%. Basil Chapman's up next, folks. Check out the opening call on the front page of TFNN. He's got an outstanding webinar coming up this Tuesday night. Sign up now. You get access to it all over the weekend, and we'll see you